Hello, I'm Catrina M. Craft, and you've just tuned into the Craft More Cash podcast, where finance meets innovation and strategy becomes reality. With over 2 decades navigating the twists and turns of tax strategies and business strategies, I've had the incredible opportunity to work with startups and Fortune 500 companies alike, crafting pathways for businesses to grow and thrive. I've tailored my expertise to serve the unique needs of coaches, creators, marketers, and real estate investors. I'm on a mission to equip business founders with the financial savvy they need to grow real wealth. So buckle up and let's dive into the world of financial success, innovative strategies, and the stories that make us all want to keep pushing forward. Welcome to Craft More Cash. Let's make wealth building simple, fun, and effective. Ready to transform your financial journey? Let's start crafting. Welcome back to the Craft More Cash podcast, where we dive deep into profitable strategies for coaches, creators, and entrepreneurs looking to grow their business and wealth. I'm Catrina M. Craft, your host and guide to smarter tax strategies and business profitability. Today, we're talking about the 5 tax deductions that coaches, creators, consultants often miss. They mix up how to deduct these, or they just totally overlook the deduction. These are key opportunities that can help reduce your tax burden and keep more money in your business. When you like to keep more money in your business so that you can continue to invest and grow the way that you would like. We'll also talk about why it's essential to get support on these, how one missed deduction or a misunderstanding could cost you thousands each year. And as always, if you're ready to take action and make sure your business is set up to save you tax dollars and boost your bottom line profitability by 20% or more, visit our website, CatrinaMCraft.com, to book a call with me so we can dive into getting you started right now on maximizing your profitability in your business. Let's start by talking about the importance of knowing your deductions. So when we say knowing your deductions, the IRS says a business can deduct what's ordinary and necessary, but you need to understand what that means. What is ordinary and necessary? Let's start with why it's important to understand this. Navigating the tax law can be tricky, especially if you're juggling $1 million business and you're focusing on growth, and you're focusing on building new services. You're not focusing a lot of times on the tax strategies. But knowing the right deductions and how to classify those expenses isn't just about staying on the right side of the IRS. It's really about maximizing your profits in your business, because the less that you pay in taxes, the more you have in profits in your business. Every dollar saved on taxes is a dollar that can be reinvested in your business. That's huge. So wouldn't we all love a clear, straightforward tax code? We would love that. But the reality is that the IRS isn't always as simple, especially when it comes to different business types and deductions. You need to understand that deductions are ordinary and necessary, and it depends on your entity, it depends on your industry, and it depends on your revenue, your goals. So much goes into what is best for the tax law for your business. Let's get into it. Let's make sure we know what tax deductions coaches, creators, and consultants should not miss and should not mix up. The first one is the home office. A lot of times people are confused about home office versus having an office that's not in your home, like a space that's for co-working. Both can be beneficial, but you need to understand that if you have a co-working space or another space outside of your home, you need to make sure that the home office is exclusive use and you're doing some activity that's different than what you have in your co-working space or your office space. Misclassifying this can cause issues if auditing. On the other hand, if you rent an office or co-working space, you can deduct that rent as a business expense. Just remember the two are different. Each comes with its own set of requirements. On your home office, it needs to be exclusive use. Another big area is meals. It can be very confusing because if you're going on a business meal with a client, meeting with a collaborator, a coworker, an employee, make sure all of that is well documented. You need to document that you're talking about business, the relationship that you and that person has. Then it could possibly be a deduction, and it's a 50% deduction currently. But a lot of people mistakenly think that every meal is a deduction just because you're a business owner. That is not clear. Making sure that you understand the boundaries could be a big difference in deducting. So if you and someone else go out to dinner and you all share the bill, you're getting 50% deduction. So we talk about going out with coworkers and maybe you pay one time and get 50% or they pay another time. You need to look at the strategies on what's the best way to deduct meals and make sure that you're understanding and documenting everything. Equipment and supplies is another area that is often misunderstood. Especially as a creator, a coach, or consultant, you may be spending a lot of money on assets. So they're not a supply, it's an asset like cameras, phone equipment, recording equipment, video equipment. All of those things are not supplies. They're actually an asset. And what you need to understand is that an asset must be depreciated. It's not an immediate expense like a supply. But the good news is some assets are allowed an accelerated depreciation. We have bonus depreciation currently occurring and also Section 179 depreciation. You need to understand those rules. That allows you to accelerate depreciation instead of having to depreciate it over a longer period. It allows you to do depreciation and deduct that expense quicker. Make sure you understand the difference between supplies and equipment, and you're maximizing those bonus depreciations or Section 179. Another area is training and education. That's often misunderstood by coaches and creators and consultants. If you are doing education that benefits your business, you're doing trainings that are benefiting your business, and it's in line with what your business does, those types of deductions are allowed, those types of training, that type of education. But typically, if you're doing some other types of courses that may benefit you personally, like maybe an exercise class or a yoga class will benefit you personally, if that is not what you're coaching about or you're creating about or you're consulting about, those expenses may not be a deduction because it's not a business expense. That's a personal improvement. So you need to be very careful about what you're spending on, and you're saying it's a business, but you have to really say it's ordinary and necessary again. Is that ordinary and necessary for your business? For me as a CPA, taking a yoga class doesn't help my business. It helps me personally to be a better person, to have more health benefits, but is it helping my business? So I would not be able to deduct that. Another area that's often missed or mixed up is client gifts or marketing. A lot of people may give marketing incentives for people to help them market their business, but you need to understand that gifts to clients, prospects are 25% limit per year per person. So if you're really giving a gift, it's really a deduction. But if you're doing marketing expenses, you need to make sure that you're documenting that they're giving you something for the marketing dollars that you're spending on them. There's a difference between marketing expenses and gifts. Make sure that you understand that and you're keeping track of that. So you may be saying, Catrina, all this sounds so complicated. I already have so much on my plate and I'm not sure I can really justify the expense of hiring a tax strategist. I get it. That's a common concern, but here's the thing. The cost of getting it wrong can be much higher than the cost of the services. Misclassified expenses, missed deductions, missteps on your taxes can cost you thousands in additional tax payments. It could lead to an audit, it could lead to penalties, and it could leave you really getting behind, and those taxes and penalties just accumulating and digging you into a deeper hole. We want to avoid that. Plus, when you work with a tax strategist who focuses on working with coaches, creators, and consultants like me, you're not just avoiding mistakes, you're maximizing your profitability in your business. Remember, if you don't pay it to the IRS, you're saving, you're maximizing those deductions. That's money you can put back in your business. Most of my clients see a profitability based on their savings to their bottom line of 20%. That's huge. What could you do with 20% more profitability in your company? What could that do every year? So this is not just a one-time thing. You continue to use these same strategies to save year over year. Now, if you're ready to make sure you're not leaving money on the table, I'd love to help you. Head over to my website, CatrinaMCraft.com, and book a call with me. We'll talk about your unique situation, explore potential tax saving opportunities, and strategize how to increase your business profitability. We're working with coaches, creators, and consultants or entrepreneurs who are high six-figure, seven-figure, eight-figure earners in their business. And they know that tax strategies are essential to substantiate their growth. Don't let tax season be a time of stress. Turn it into a time of opportunity. Don't wait until tax time to start your tax planning. Tax planning starts before it's time to send your documents to your tax preparer. I am a tax strategist, and I'm looking throughout the year on how we can maximize those deductions. What do we need to do every month, every week, every quarter to make sure that you are utilizing the deductions that the tax code allows? Thanks for turning into this episode of Craft More Cash. Hope today's insights give you a fresh perspective on the importance of understanding and optimizing your tax deductions. Remember, every business is unique, and getting your deductions right can make a huge difference in your profitability. If you have questions or want to learn more, don't hesitate to reach out. And of course, don't forget to visit CatrinaMCraft.com. Look on schedule a consultation to find out if we are a good fit. We want to help you maximize your profitability and eliminate extra taxes that you should not pay. So let's work together to maximize your financial success and make tax season profitable. Make it a great time of year for your business. Until next time, keep building, keep creating, and keep growing. Let's craft more cash.